Her Opinion Show, the podcast you didn't know you needed. Real talk, bold truth, her voice, her vision, her rules. Let's get into it.
In this episode, we're doing something a little bit different. People might say, oh, somebody's missing. But today I have the lovely Shavee Ho who's going to co-host with me today.
Yes,
Thank
we're
you so
in
much
the
for
building
being here.
today.
Yes,
Thank
and I'm so
you.
excited because we have a really great guest.
Yes.
She was with us when we first started. Oh my gosh, we were in a office building.
Mm-hmm.
Our cameras weren't cameras.
They were iPhones.
They were iPhones, and we had the little microphones that were the ones that plug into the camera. So you were with us from the very beginning. Thank you so much for being here,
thank you for
Stepheny
having me.
Jacquez. Tell us, you have been so busy, everything that you're doing right now. Tell us a little bit about yourself.
Yes, Selma has changed since the last time we met on the podcast, and I know it's changed for you guys. I see so much growth and where you are now. Congratulations.
Thank you.
And for me, there has been changes of growth, of a new office space, of expansion in my firm, adding new team members, helping a lot more clients, and it's all great things.
Yes, and we're so happy because we see your growth too. And so everything that you're doing right now is just great. So you are in the business of insurance.
That's correct.
So tell us a little bit more about that.
Life insurance.
So it's just life insurance.
Life insurance, financial products. So financial professional, but my primary focus is bringing education on the importance of having life insurance. It's a very taboo topic that people don't like to talk about. It is scary. You think if you talk about life insurance, you are calling death for a lot of people. And we're here to break that stigma and say life insurance is a necessity in every single person's financial portfolio. You need it. God forbid something happens, which will, the only thing we have guaranteed in life is death. So why not plan for it, right? And that's what I help my clients do and educate and build, protect families, which is the biggest thing in financial education and generational wealth.
Love that. So honestly, what can you say for people who don't plan or don't like to talk about that situation? My family's from Louisiana. We have a lot of superstitions, and it can come off like, okay, if I do talk about this, then it's me wishing death on my family. So what can you say when those families don't prepare for the worst?
Don't do your family a disservice. Don't do it again. You get car insurance now hoping that you're going to get in a car accident.
Yeah.
You buy home insurance not hoping that your house is going to catch on fire. Because you're getting protection doesn't mean that that's going to happen. You're just planning for the worst. And if something does happen, there's peace of mind. So that's what I like to tell the client. Have peace of mind. Eventually, we're not planning that it's going to happen right now. We said it, we forget it. You're protected. You have peace of mind for your family. And one of the things that I see the most when there is no planification, now there's instances in families where now there's conflict because there was no planning. And it brings a financial burden aside from the emotional pain of losing a loved one. Now they have to worry about the financial part. And a simple monthly payment a month can save all of that hardship. So that's what we try to explain to families.
I'm just talking about generational wealth because that's one thing that a lot of people don't think about, that life insurance, there's two different types, right?
Correct.
And so one of them can help with, some of the future expenses and things like that. Tell us a little bit about that.
Yes, that's something that a lot of people aren't aware of. We think life insurance and we think about death, right? I'm not going to use it when I have it. Somebody else will have use of it. But no, now there's life insurance that are a little bit more modern. They have cash accumulation, that have living benefits. God forbid something happens to you while you're alive, critical, terminal, chronic illness, you can tap into the death benefit while you're alive to cover medical or living expenses. So think of a cancer. God forbid something happens like that. You can tap into a death benefit. Let's say there's $500,000 in death benefit coverage. You can tap into $500,000 while you're alive to make sure that you're taken care of. Keep some for you, keep some for family. Now there's the cash accumulation portion, where a portion of your monthly premium is going to generate you more income. It's creating compound interest. Down the line, that compound interest, build a good bucket of savings that you can access in a form of a loan or withdraw tax-free. And that's where I tell my clients, this is strategy. You're putting money away that is growing for you, not in a qualified account, and still money that it's growing in a safe spot, but that is tax free. That there is strategy, and it's powerful. You're growing money you can withdraw without paying taxes. You have death benefit, you have living benefits, you don't lose.
And you can use that for other things.
For a lot
you
of
can
other
take it
things.
out. So you can take it out. Doesn't necessarily have to be an emergency. Maybe you want to
It's
invest
an
in
investment.
something.
It's an investment. I had a client the other day who called me. He has about inside his life insurance policy about 100,000 in cash accumulation. All you have to do is make a simple call. I want to take a withdrawal of 50,000 in form of a loan. You got it. We do this. We call the insurance carrier. They do that switch in 2 to 3 days,
And it's
now
tax-free.
you have money, tax-free money
Oh,
that
I
you
love
wouldn't
that.
have saved inside your bank account because there's and a lot of people aren't as disciplined and in saving. But this form, besides investments and other assets that you may have, it's an extra source of saving and cash value.
And that's very important. So you can use the money. So let's say you take out the money. Well, what happens? Do you continue paying it, or how does that work?
So these policies are so flexible. You can withdraw, but I don't recommend a withdrawal because now you're stopping the compound interest. Why don't you loan on the money? You take out a loan, in this case 50,000. You can either pay it all back in full. You can do monthly payments, or you don't pay it back because the company has your death benefit as collateral. So if you decide not to pay it back, when it's time to pay that death benefit, they'll just deduct whatever loan you took out. So again, it's very flexible. Another example I'd love to give my clients is you have money inside your life insurance policy tax-free. You go buy a car, how much interest are they going to charge you on that car?
Yeah.
Let's say 7%, right? But you know that you have 50,000 inside your life insurance. Go pay for the car in full and give yourself the monthly payments. Now you became your own bank with life insurance, taking advantage of the tax-free strategy.
And it's going back into your.
It's going back into your pocket and it's generating you interest. So now your money is making you money while you're making money.
Yeah, that's strategy for sure. It's a safety net. It's a peace of mind, like you said, and it's also, helping you build and grow. Like you guys mentioned before, growth is so important. And I believe that growth comes with, kind of breaking those bad generational patterns that, our family had or didn't even know existed. So how can one start just by learning how to make their money work for them?
Yes. So I come from a background that these are conversations that we didn't have. So I understand my clients completely when they say, I don't know where to begin. My family didn't talk about it. And that's okay. All that matters is you're taking the incentive to ask the questions and to educate because it's not too late. You're healthy now. There's still time. Let's work on it. Let's just figure out a financial plan. We do a financial needs analysis, see where you currently are, what situation you're in. Do you currently have debt? Do we need to start putting a plan to pay that down? Do you have retirement plans? What are you missing in your financial portfolio? What can we recommend? And that's where the planning comes in. But I tell the client, never be intimidated. They're conversations that we need to attack rather sooner than later, because before you know it, time passed. Now we're in a situations like our families where grandparents or parents where they didn't plan for retirement. And now as children, most of them have to take care of their parents, which we're very grateful to do. But I know in my case, I don't want to do that for my children. I need to have a plan because I'm not my children's responsibility for them to take care of me. So when I get to 65 retirement age, I need to make sure that I have that plan in place. And that's diversification in real estate, life insurance, a full financial portfolio.
Yeah, that's so true. Speaking of children, personally, I want to create trust fund babies.
We need to work on it. Let's work
in
on
my
it.
family,
Yeah.
we've never had that. It's not something that is spoken. I want to start that. So what does that look like, even
Yes.
starting?
Well, it starts with one. You are the one that's going to change everything, right? And it's just, again, looking down at the numbers, looking at budget. How old is your children? How old is your son, right?
Yeah.
So let's say, how old is your son? How long do we want to compound for his account to grow? And what would those numbers look like? So all we have to do is figure out what that monthly budget looks for you. Okay. But we can start as little as 15 days. Get coverage on a child as little as 15 days. Wow. And now, again, example, a child, they can open up a Roth IRA. They can't do a 401k. but a Roth you can. And now another strategy is life insurance as well, because it's tax-free growth. And you're getting life insurance protection on your child. God forbid anything happens. They also have access to living benefits with most carriers. So you're just getting a full package for them, and you're locking in that insurance rate.
Oh, I love that.
Is it affordable?
Yes. Well, it depends, right? It's customizable depending on your budget. Now, we have clients who waited way too long and now have medical conditions. That's what makes life insurance coverage go higher in premium. Now, when you're young, you're healthy, it's a lot less than people think.
And do you have to do like a medical exam?
No,
Okay.
that's another thing that I'm always educating on. Ever since COVID, things changed. So now most life insurance coverage no longer require blood work. When you submit the application, they go based on your medical history.
So you have like the term life. That's one of the policies that I have. I actually have like 3 of them on me. Don't. No, my kids.
Don't try to get rid of me.
I know, but I got them whenever I was in my early 30s.
Great.
You know, so I'm paying, like $30 a month for them, and it's gonna be, I'm gonna have to renew whenever I'm 60 or what
Well,
is it?
that's the thing. We don't want to wait
That's
to
the
renew
thing.
at that age, because now you're 60, 65. Our options are very limited, and the cost is going to be extremely high.
So what do you do in that case? Like for me,
In that case, we look at options to permanent. You started off with term. You were in a different phase in life where probably you were looking for something extremely affordable in the 30s. But now you want to have coverage forever.
Yeah.
Because when we need life insurance when we're younger, it's going to be a completely different reason to when we're older. When we're younger, we're thinking of high coverage to pay off assets.
Yeah,
God
whenever I
forbid,
pass away,
that the kids are taken care
Yeah.
of. But when we're older, now we have to think of health conditions. What if you need to go into a nursing home? What if you need extra health care, or you can tap into cash value that you can use?
and a lot of people don't have like a retirement. Other people have retirement 401ks, and then other people are self-employed that don't have that option or haven't gotten into any kind of investments. That would be a better option for them, no?
Depending on the client, I can't say that it's better than investments, but it's part of their financial plan. But again, it's all tax-free. Growth inside your life insurance, you're getting living benefits, a death benefit, and it should be part of someone's retirement plan.
Yeah. And like for me, so when do I switch over? What would I do?
So I would suggest right now.
So what I
We're
mean,
going
but
to an
how
appointment
does it
right
go?
now.
How does it happen? So I'm not going to cancel my other policy.
Right. We, as an agent, I can never leave you without life insurance.
Yeah.
So we just reevaluate what you currently have. How can we improve it? What is missing in those plans? More than likely, their term. They might
they are
not
term.
have living benefits.
And I have a whole life insurance
Okay.
too. Yeah. So
And
I have
I'm sure
both.
the premium is very low
Very
on the
low.
whole life.
Yeah, because I got them earlier.
Yes. So there might be cash value in.
Yeah,
their
and I
whole life.
haven't
So
taken anything out.
We will look at that. If we needed a transfer into a new policy, we would just put a permanent policy. You get the coverage, see what the monthly premium would look like. How much coverage do you need now? Example in that, we take how many children do you have? Do you own debt? How much coverage? And then from there, we just apply
And you could use it for real estate. You could use it for anything.
the
See,
cash value.
Really
that's what I need.
really good.
Now we can get into the overfunding. Overfunding.
Oh, so talk about that.
So in insurance, there's so many different type of plans. There's IULs, ULs, whole life.
What is
But
that? IUL.
They're different. IULs is an index universal life insurance, death benefit, cash accumulation.
I heard that was the best.
It is. In my opinion, it's great. That's what I have been using a lot for my clients. It's not inside the stock market. It works based on market performance. That's what makes it tax free, because it's not a qualified plan. So with those plans, they're flexible. You can overfund to have access to money quicker, to have access to tax-free growth. And with that plan, there's different type of plans that how we can structure them. There's executive bonus plan now if you're a business owner, Keyman insurance. So now we can really upfront add a lot of cash value, overfund them, and you have access now to strategize more for real estate and whatever other purchases you would like.
That's
Yeah,
great.
that's really good. So I have whole life, but then I was gonna open one for my son, and that was more geared towards growing the cash value, so that way when he graduates, he has something to fall back on. But what is the difference between whole life and the IUL?
Great question. So they're both permanent life insurance policies. Whole life will be a guaranteed percentage on your growth. A lot of times it could be 4 to 6% that they're guaranteeing that your policy will accumulate in percentages. And in IUL, there is no guarantee in growth. However, there is, in some cases with some of the carriers, no cap. It follows and mirrors the market. We call it market mirroring. So let's say the stock market did 15%. With no caps, you can get some keep, for example, some fees, but you're still generating 12%, 13%, all tax-free growth without penalties and without growth. So whole life is on guaranteed. IUL is not guaranteed, but no cap.
Got it. But with IUL, isn't there like a bottom number?
There's a floor.
Okay.
And depending on the life insurance policy, there's a floor. So you're never going to lose.
Right.
They're guaranteeing you at least a 1%. So 1%, however, when the market is high, you can get a 12. In a whole life, you're only getting a 6.
Got it.
But you're missing out on those other higher cap rates.
At any time. Well, to switch it a little bit, I mean, all of this is interesting. Tell us a little bit about you, because you are an entrepreneur. You have a team. You just said you got a new office. How did you even get into life insurance?
Great question. So prior to that, I was in the car industry and investing in real estate.
You were a car sales girl?
I sold cars for a very long time. That's how I started my sales journey. My husband and I started a car dealership early on in our life. It's 18 years old, car business and sales. From there, you start making money, right? You start investing your money, but then you start to realize that now you need to protect your money and you need to protect your assets and what you work so hard building. So there was a situation in our family where there was a sudden death, very unexpected. They were business owners, and it taught us so much of what can happen when there's no wills, no trust, and you're a business owner. Of how
and that's complicated, being a business owner.
Very complicated, especially if your spouse is not in any of it, because it's just not the way things were done.
Yeah, because you're dealing with another partner or somebody
Yes.
else.
So now you have to prove to the courts, and it goes to probate. There's a lot that goes into it. The debt now can transfer over. So that situation made us open our eyes. Wait a minute, we need the protection. I started looking into it. Someone presented me the opportunity. Did you know that you can tap into this industry? And I said, no, but it's interesting, and I see the value of it. Because as business owners who's making a certain amount of income, we didn't even understand the importance of it. I'm sure there's many more. Yeah. So that's how slowly I started to get into the industry, found tons of passion in it, because as you're in this industry, you hear stories for days. And so many sad stories of people losing their spouses, they lose their homes, their cars, they can't maintain. But one simple policy could have solved all those problems. And that's where now my passion is, making sure that I'm also educating agents to do the right thing for the client and do the same.
Are you just have agents that are insurance agents, or do you have a different type of staff, or how does that work?
So I have staff. I brought on an executive assistant. She's great. She's made my life so much easier. And everybody else is independent agents. So if anyone is a licensed agent and wants to join a growing firm, they could.
So, talking about that, is your husband still own the car dealership?
Yes.
Okay,
He's
so you're
very
still
supportive.
So you still have that business.
It's still there. And we are serialpreneurs, where we tap into different businesses, outdoor venue, real estate. So we have that entrepreneur mindset, and that will always be there. But my passion is here, and I'm focusing on growing this. My growth plan of where I want to be in the next 10 years is where my focus is going right now.
You're also a mom.
And I'm still a mom.
Yes. How many kids do you have?
I have 2 boys, a
Lord.
16-year-old and an 11-year-old.
Oh, you don't look like you have a 16-year-old.
Thank you. He's very tall. He's 6'5".
Oh, I know. I don't
He's
think.
a giant.
Well, you're tall.
I'm
so.
tall, and I look short next to him.
Really? Oh, wow. Well, all of that is really great. Now, we're going to, wrap up a little bit. We're going to play a little game with you just to wrap up, and it's called Inheritance or Liability.
Okay.
So we're going to say a few things, and then you're going to answer back whether this is a liability or if it is inheritance.
Okay.
Okay.
Fine.
So, student loans,
Liability.
liability? Yes. A trust fund,
That is a, what was the word?
inheritance.
Inheritance.
Should have got a sign.
I already forgot. Inheritance.
Okay. How about medical debt?
Liability.
For sure. Life insurance payout?
Oh, that is a beautiful inheritance.
Right.
All tax free.
A family owned business,
Inheritance.
credit card debt.
Liability.
Okay. This one's kind of tricky. Paid off real estate.
Inheritance.
So could it be a liability though?
For tax purposes, if you're not having an estate plan and life insurance to help pay off those taxes, then it could be. But that's where the planning comes in place.
Exactly.
And we need to make sure that we're estate planning. There's wills and trust.
And that's what you help with the financial planning and
Correct.
everything. So just to finish off, give us a last thought maybe to somebody who is thinking about getting life insurance or, something is stopping them from getting it.
If it's already on your mind, set the appointment. It's sitting there in your mind. The last thing we want to be in a situation where you didn't make the call and now your family is in a difficult position.
Yeah.
All because you didn't pull the trigger. And if something's stopping you, whether it's fear that it won't pay out, you heard this person say this about the insurance, or you read something online, it's a simple conversation that can clear out any doubt and will get you protected.
Great. Thank you so much for being
Thank
here
you.
with us.
Thank
We're going to
you
have
so
to
much.
bring you back. And because I know you have a wealth of information and knowledge. And so we really appreciate
Thank
you
you
being
for
here
having
with
me,
us.
and I'd love to be back.
All right. Let's cheers.
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 Yes.
Bye.